G'day everyone, welcome back to Pete's Investing. Today is June 29, 2023. This is the British Pound US Dollar currency update. On our weekly, and we're in a bullish momentum. On our daily, we've broken down into a bearish, and on our hourly, we've broken into a bearish as well. But notice also we've hit our divergence target, and I'll talk about that in a minute. First off, on the weekly, we look at the triple moving average of the price chart, the moving averages of the CCI 150 and the moving average oscillator. They're all bullish. So predominantly bullish trades to be taken on the lower time frames. You'll notice also the prices on the weekly, it's hit this 61% Fibonacci retracement, and that's always a key level to look out for at any time level. And it's potentially going to have a bit of a pullback from there. That's a key area. I mean, it can pull back anywhere, but that's usually the line in the sand that's drawn on most timelines and charts. On the daily, as we said, it's our indicator showing a bearish signal with our moving averages and our oscillator. It did bounce off the key resistance at 128.42, and it's been declining since slowly. And you can see there the range. And again, let me go back to the hourly to give you a bit more clarity in terms of some of these areas. We did have a bearish divergence on the CCI back here versus a bullish divergence. It came back. Let me just delete that Fibonacci. It came back and hit our target, and that was the Fibonacci range I just deleted. And more recently, we had this bearish divergence on the CCI as well versus a bullish on the price. And at the posting of the last video, it just broke below that channel, which was our entry level or entry parameter. So had you gone short there, the price sort of went sideways for a number of hours. But then it finally broke through in the last few hours of trade and hit our target. And that target area was between the 38% to the 50% level of the Fibonacci retracement. So hopefully you got into that trade. And again, these generally work out. I always pick the closest target range. This could always bounce from here. So try not to get too greedy and get too deep a target down here. I usually take the closest Fibonacci available. So that's worked out quite nicely. Now these divergences are traded in isolation from the back test. You can see here we've got a bearish back test and a bullish back test. You can see there that they average down. We don't use stop losses in the back test. So the way to trade those, as I always say, when the weekly and the daily are aligned, and with the hourly, that's when you take those trades bullish or bearish. Again, none of them, the weekly and daily are not aligned at the moment, so avoid trading the strategy. And to understand how to trade some of these strategies, we've subscribed to the Patreon page where we also do weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.